Fernando, Energy Council member, Ceylon Chamber of Commerce, Chairman Energy Council, National Chamber of Commerce.
Good morning, everyone. We represent basically about 2,000 companies in Sri Lanka that are really affected by this high electricity cost. And my discussion here today is going to be based on the electricity cost for the consumers as well as the industries as a whole. End user electricity tariff proposal, we have seen number of weaknesses. Projection methodology. Significant discrepancy between the projection and the actual reservoir inflow exists. We have realized that what is based on CB submission, reservoir inflow projected for June was 475 gigawatt hours, actual was 575 gigawatt hours. So there is an additional hydro of 100 gigawatt hours. La Nina is expected to increase the rainfall in June, August and decline in October and November. However, the CB has taken a big decline for October, December and not taken the increase in June and August. By assuming only pessimistic conditions for both, the CB projections necessitate more expensive oil-based generation. This will lead to higher tariffs and higher CB profits. Furthermore, past data indicates a pattern of CB overestimating costs in their tariff overcasting models. This is evidenced by the Q1 2024 profit of 58 billion rupees. This could lead to artificially high tariffs, unnecessary burden on consumers and including industries which are already struggling to survive. Increased CB profits, overly conservative projections might lead to higher profit margins for CEB achieved at the expense of key economic sectors. Therefore, accuracy of the tariff forecasting model is an absolute must, which is evident by a 58 billion profit that they have generated in the first quarter. Electricity cost impact on manufacturing. Electricity costs are significant overhead expense for manufacturers across the board. This has been a consistent concern, jeopardizing the industry competitiveness and hindered investments in crucial backward linked industries like apparel and textile and overall every industry in the country. So immediate action is recommended to address this issue. Implementing a reduction in industrial tariffs would be a major step towards rectifying this situation. Additionally, exploring long-term solutions to minimize electricity costs for manufacturers is essential for ensuring the continued success for this sector and the overall health of the economy of Sri Lanka. So this will relate to another topic that I'm going to take up in the end of it regarding wheeling. Industrial tariff reduction. CEB proposed tariff reduces 25% for domestic users and an overall 13.8% decrease is a positive step, definitely yes. However, the exclusion of the industrial tariff from this reduction raises concerns for us because at the end of the day, the industry will have to survive first for the businesses and the people who are employed by them for them to survive. Given the critical role the export sector plays in the economy and considering the arguments presented regarding high electricity costs impacting competitiveness, as outlined previously, the inclusion of a similar reduction for industrial tariffs is also recommended and it must be seriously looked at. This will directly address the concerns raised and support the continued growth in the industries. Then strategic planning. Scheduling a major coal plant shutdown during the anticipated low rainfall period, October and December, due to La Nina conditions raises concerns about the strategic planning. This over-reliance on expensive oil is likely to escalate energy costs, replacing the missteps observed during the 2023 El Nino period. Therefore, prioritizing strategic energy planning is crucial to mitigate unnecessary reliance on expensive fossil fuels during the low rainfall periods. So this shutting down the coal plant during this period must be seriously looked at. Improper financial planning. The previous submission highlighted a significant increase in capital expenditure and operational expenditure across CEB divisions, transmission and distribution. This filing raises further concerns as each division now reports additional unforeseen requirements. These elements including erroneous deductions, outstanding regulatory levies, and past due sick leave incentives all emerged within a mere 3 months of the previous submission. This suggests shortcomings of CEB's financial planning and cost management practices. A comparative review of these practices is recommended to ensure accurate budgeting, transparent reporting, and responsible financial management. How come these kind of things appeared all of a sudden within the last 3 months, which was not there in the last submission? Then profit management in line with the tariff methodology. The CB's substantial profits in 2023 and Q1 2024 largely attributed to the October 2023 tariff increase. According to tariff methodology, there should be a recovery of excess profits exceeding the allowed return on investment. However, this mechanism was not implemented during the previous tariff increase. Rooftop solar. Continued encouragement for rooftop solar installations in factories and commercial buildings and domestic residences can significantly reduce demand on the grid and electricity costs. We recommend continuing the existing rooftop tariff at least until the country reaches 2 gigawatts RT volume. We are now at 1 gigawatt, so we are recommending it to go on until we reach 2 gigawatts. Average cost of Southern Supplementary Power Station for the January this year was 123 rupees and 87 cents, and for the February 76 rupees and 35 cents. So you should understand what we are replacing is these high cost thermal generated power. So continuing the rooftops, which was the largest energy addition to the national grid over the last 7 years, is a must. Harnessing natural advantages, prioritize Manna Basin wind resource and lower costs. So it's evident that the local companies have already bidded for under 5 cents per kilowatt hour. So it is proven that there are local companies who can come in and supply energy at much lesser price than what has been on the table with the controversial energy transaction with Adani. So explore the downward regeneration tariffs to avoid future cost burdens for customers. We should likely to look at renegotiating the tariff for something under 4 cents. That is the projected number for a 500 megawatt project of this nature with over 40 megawatts of over 40% of plant factor. I'm sorry, I told you that I need a little more time because you invited me here and I need more time. I have 2 more pages to go. Thank you. Transparent competitive bidding. All power plants procurements above 10 megawatts must be done via transparent competitive bidding process and best-in-class technology and the price discovery and the manner that projects the interest of the consumer. Below 10 megawatt continues under the reasonable feed-in tariff mechanism, which is already established. Setting up a feed-in tariff to bought under the review of the PUCSL, which has to be seriously looked at. Furthermore, the PUCSL is legally obliged to only procure power plants using the least cost methodology, and once the new act is in place, only though competitive procurement mechanism and feed-in tariff. Of course, there are various things in the new act to allow the previously cabinet approved plants to go through. So there was a cabinet paper that has come up recently with 3.15 gigawatts of renewable energy projects to be procured under this scheme. So all those things must be relooked at, and these should fall under the competitive bidding process where the end consumer will get the benefit and the country as a whole will reduce the energy cost. Power wheeling charges. Cost to adaptation of power wheeling. High wheeling charges could discourage the adaptation of these facilities. Complex pricing structures lead to minimal adaptation. Penalizing local companies and investors, it is recommended for PUCSL to prioritize charges for incentivize large-scale adaptation of wheeling and open access too. Target-driven pricing. Policy decision must be taken to clear targets. A target, let's say, for example, we want to have for 250 megawatts of rooftops for this year, so that rooftop tariff must reflect that, what we need to take. So 200, this is how these things are done in the other countries. If you need to take a 1 gigawatts of rooftops, you have a special tariff for the rooftops, special tariff for wind, special tariff for ground mounted, and then move on until such time we reach that. That is why I said earlier, we need to have at least another 1 gigawatts of rooftops coming into this market to stabilize this price. As my friend earlier said, it is a rupee-based tariff, what we are talking about, not a dollar-based tariff. Just imagine, the dollar today is 310 rupees. If this hits by any chance, by the time that we start paying the debt to 500 rupees, our tariff that is tagged to 8 cents or 9 cents, 8.26 cents are going to be double the price of Sri Lankan rupees, which you and I will have to be paying.